Hello, all. This is Dr. Dave Maslach. I'm talking about reciprocity.com. The E is spelled with a 3. And this is a particular platform, a sharing economy proofreading platform that I'm trying to build so that you can get feedback on the writing that you are doing, and as well as learn different skills and just appreciate the wonder in this world of all the amazing things and amazing people that are out there. In this particular video, I really want to talk about mitigating entrepreneurship or entrepreneurial risks, and just the risks of investing in creating startups or creating some new entity, creating a new innovation, for example. And there's lots of risks that are involved. So what I'm going to get into is talk exactly about what do I mean, and what, first of all, why is investing and creating new entrepreneurial things and innovations, why is that a good idea? And then get into, what are the possible downfalls, what's going to happen, sort of the loss perspective on what's going to happen, and then finally get into possible ways to mitigate and to reduce all of these risks and problems and stuff like that happen. So with that, why do we want to invest in entrepreneurship, and why do we want to invest in innovative ideas? So first of all, what is innovation? Innovation is what broadly speaking, there's lots of different sort of ways to frame innovation, but broadly speaking, it's just creating new ideas to focus on a problem, to in specifically for thinking about sort of commercialization in one way or the other. So thinking about how to actually turn this into something that's actually going to make money in the future, right? So that is the thing that I'm thinking about. It's problem solving, it's focusing on ideas, creating a new idea, and that it has sort of monetary or financial perspective or financial opportunity in the future. Now, entrepreneurship, on the other hand, is really about this process of coming up with an idea and starting a business around a particular idea, right? So it's creating, and it could be multiple innovations that are going on within the business. In fact, there always is with a business entity. You always want to think about, multiple product lines, for example, and start developing things in the long run. In the short run, you don't want to do that. You want to just sort of focus on something really narrow and small. But, why do we want entrepreneurship and innovation in the economy? On the macro scale, or on the macro side, it creates a lot of jobs, right? The vast majority of any economies, and the global economy, in fact, the global economy's jobs are created by small business, by entrepreneurs, right? It's anywhere from 50 to 75% of all jobs, all employment are due to small businesses, right? So the large businesses you think of is only a small part of the economy. It often creates it fills a lot of unmet needs that we couldn't possibly address without having that. It changes the way that we live dramatically. Both of those things change the way that we live dramatically. Every single year there's some new innovation that's happening that makes my life better. Sometimes it makes it worse, but often it makes it better. And in sort of the grand total, it makes things better. It also, in terms of the entrepreneurship side, whenever somebody creates a new business entity that sort of solves my need, I am happy that they've done something like that, because they usually, is usually this sort of, you make this sort of mental trade-off as a consumer. You make this mental trade-off, I'm going to purchase this thing to make my life so much more easier. And we do, right? And then the other thing is, it's pretty formally uniform consensus across any academic that looks at this particular area, right? I don't know if I mentioned, I'm a professor of innovation strategy and entrepreneurship, but in general, it would be hard pressed to find somebody that didn't say that innovation or entrepreneurship didn't make the economy more prosperous. It didn't make us better off, right? So those things are really key to driving our economy, right? At the macro level or the micro level, we often pursue motives as entrepreneurs or as innovators to become more prosperous yourselves, make money, right? That's a key thing, as well as thinking about future opportunity, future prosperity. That's so important, and doing good at the same time, right? So entrepreneurship, both of those are about solving problems, in sort of one degree or another. And it's really about, and when you solve problems and you sort of match or resolve an unmet need, you're doing good. You're helping somebody else out. That is sort of a fundamental thing that you have to do to become an entrepreneur or an innovator, no matter what industry you're in. Yes, there are some sort of areas that people might sort of think that that's debatable, right? So, a tobacco company, right, that might be debatable there. Or e-cigarette company or something like that might be debatable in terms of sort of the trade-off of good. But in general, in the short term, for those particular people, those consumers, that you're helping them out in at least in the micro side, right? In the micro, very small, narrow sense of it. In the long run, it might not necessarily be sort of helping them. But if you think of chemical dependencies, for example, that they might have. A lot of people might have various forms of mental illness. So, smoking, for example, might be soothing the mental illness. It's some form of medicine, right? That's really a big part of why people actually smoke. It's a soothing sort of reaction that you get to a stressful event, right? That's why people smoke, or anyways, I'm going along a different direction. But basically what I want to do is come back to innovation and entrepreneurship drive the economy in one way or the other. It drives sort of personal wealth as well. It's really incredibly important. However, I'm going to take a cup of coffee right now. Just one sec. However, it's very, very risky. It's very difficult to do. Most innovations actually don't result in solving the problem. I mean, it might solve the problem, but then they're not commercially viable for whatever reason, right? The vast majority of them are not commercially viable. In terms of entrepreneurship, most entrepreneurial ventures, they do disappear after a while in one degree or another. Sort of debate on how they disappear and whether they go bankrupt, whether they get bought out, whether they pursue some other thing, all that kind of stuff. There's all sorts of different reasons. So it's not like they just disappear and they're complete failures, but people pursue different things and they go in different directions and stuff like that. But it is a really risky thing in general. It costs a lot of money, right, to pursue something, to try something else. Takes a lot of time to pursue that particular thing. Consumes a lot of different resources, and often consumes social relationships. For example, resources that you have in social relationships, you're sometimes trading that off. There's all sorts of things, all sorts of resources that it's consuming, and you can lose all of that, right? There is a tremendous amount of possibility, a very high possibility that you can lose all of the things that you create, right? There are downsides to entrepreneurship and innovation, is what I'm trying to get at. And generally, in these kind of marketplaces, it's called the distribution of the outcome is usually like a Pareto distribution. So basically, a lot of events, a lot of innovations, a lot of entrepreneurial ventures cluster around making small to medium amounts of money and prosperity, but then there's one or two out of thousands that might create a massive thing, right, that can take off and become huge. You don't know which ones those are, right? That's why investors are really, really poor at making those decisions. Entrepreneurs are very poor at making those decisions to sort of figure out where to cap your losses. So what can you do, or what can you actually reduce the how can you mitigate risk of sort of this downfall or the losses in the long run, right? It's a really tricky thing to do. Lots of people have been thinking about this for a long time in sort of the academic area. And I think that there are several different ways that you can do this, and I'm going to list them right now. So the first one, capping your losses, right? So having a really strict budget, doing capital rationing, making sure that you are minimizing the amount of spend that you have on anything. So really scrutinizing and thinking about the spend that you have on something and reducing it and making it as minimal as possible until it actually, maybe it does take off, or, you know, there's some incremental improvement or something like that. Just having really, really strict budgets all the time, sort of minimizing that as much as possible, right? So Walmart is famous. So Sam Walton was famous for having, you know, his office was, I believe it was a lawn chair that he was sitting on for a while to cut costs, right? So just having, you know, really, really minimal budgets, whatever that is. You have to be really careful, right, with any of that kind of stuff. You don't want to jump in. In fact, I'm going to suggest do not ever get, you know, any particular loans or anything like that with an unproven venture. Even with a proven venture, you don't know if it's actually really proven until you are really pursuing it. So it should be generating money for you in whatever way, right? So going out and getting a small business loan, an SBA loan, for example, whatever it is to create a restaurant in some new location, going out and, you know, maybe investing largely into some new innovative idea. That could really sting. It could really hurt you. In fact, that's the reason why I actually started thinking about this. Is I'm like, thank God with reciprocity, I didn't do anything like that, because it's not making me any money at this moment. You know, I had a really tight budget, and the people that were developing it, they're trying to push me to spend more, of course. And they wanted me to spend a heck of a lot more, like double, triple the amount that I actually was willing to spend. And, you know, I thank God I didn't do that, because the fundamental problem was not actually the development of the site. The fundamental problem is actually getting traffic to a particular site. So it's a huge trade-off. It's a huge thing that you have to look at. And I wouldn't have known that at the time until I actually started doing this and actually started getting it live and getting people to look at it and stuff like that. It has nothing to do with, that the problem is not the development of the site. And I know that there's sort of what's an endogeneity problem, right? A better site's going to drive more traffic, but it's really expensive and costly to get to that point, right? So you should be trying to build traffic or something like that in a different way if you're doing an online thing, right? So I would have been better off. I was thinking about this. I would have been way better off if I would have just created these videos and started doing these videos just for the hell of it and see what happened, and creating an audience first and getting traffic first, rather than trying to build the particular site first. So it would have been way better off to do that, financially speaking. And I wish I would have done that to some degree, but thankfully, I had a strict budget. My wife kept me on it, that she kept me pushing on the budget and make sure that I capped our losses, right? So we did. And I'm going to call it at this moment, it's a 1 year out at this moment. I'm going to call that this venture was a loss. And I wouldn't have known whether it was going to be a loss or not until you actually do it, right? So you want to minimize that as much as possible. And now this does take time, doing these videos and stuff like that. And my time is valuable, tremendously valuable, right? But at the same time, I'm learning something, I'm developing something else. And I'll get into that in a minute. The second thing that you should be thinking about is focusing on options, right? So creating the right, so what is an option? It's the right, but not the obligation to pursue a future opportunity, right? One sec. So options was a really big financial sort of breakthrough that came out, I think it was the 60s. I think that's when Black-Scholes came out with this particular idea. I think it came out in the 60s. I want to say maybe late 50s. anyways, it's this idea, right, of creating, if you look at any distribution that, or any outcome whenever you pursue some action, that there's going to be upsides and downsides. And what you're trying to do is reduce the downsides as much as possible with an option. So thinking about different ways to create options. So making minimal investments in something and seeing if there's going to be an upside in that, right? So if you jump into something and spend a bunch of money, then that's not an option. You're going to lose all of the money generally. But if you make a minimal investment and see what's going to happen, you see if it's going to rise and there's going to be an increase, then that's actually going to be a good thing, right? So you can sort of think about how to figure out to structure different deals, to think about different ways, different arrangements to think about creating options, right? So it might be, so for example, you're thinking about an entrepreneurial idea and you would love to do it. Maybe you want to create pies, right? You're a great cook and you want to bake a bunch of pies. And a lot of people would say, just jump right into it, create a pie restaurant and put it into the downtown and, become a bakery. That is probably a terrible idea because you have no idea what it's going to take. You don't know how long it's actually going to take. And, it's going to require a huge upfront investment. You could probably, 99% of the time, I'm going to guarantee that you're going to lose your shirt doing that. But, another possible way is to think about moonlighting, to think about contract work or pursuing a particular hobby, right? So moonlighting, right, that, or pursuing this as a hobby, you really like to bake pies. So you just start baking pies for other people. And you just be generous and start making as many pies as you can and just giving them away. And, eventually somebody might say, wow, I really love that pie. Can I actually buy one off of you? Or they might start giving them away as well. And that might create a business that way, right? You start getting customers, you start getting particular traffic or something like that, right? The other thing is like just contract work, just going out and doing sort of contract work. It can be a little bit difficult to start getting your first contracts, but over the long run, you sort of pick away at that and it'll grow. Moonlighting, you do something on the side for a long time. However that is, you just help somebody else. Maybe you like to cut grass, so you go out and cut other people's grass. Something easy, and then that can turn into something that's a little bit bigger, right? It'll grow from, a couple hours a week to all Saturdays, all Sundays, and eventually it becomes this bigger thing, right? And it's going to take time. It does take a lot of time to do that, and that's what you should be doing, right? Cheers. The other thing, so the third thing you should be doing is focusing on interdependencies, thinking about how all of these things overlap, right? So thinking about if you pursue a particular venture, whatever it is, that you should gain something else that is completely independent that's going to allow you to grow and prosper, right? So whether it's a learning thing, you want to learn a particular skill, so you pursue that thing to learn about that particular skill, right? So you just document the process, for example, of learning about that particular skill. You can also leverage, learning that experience and leverage that experience into new areas, right? So I wanted to learn about, I knew that, I have an academic sort of view of entrepreneurship and innovation, and I've created things in the past in sort of the academic world. So I thought maybe this would be really cool to create something that's new and different, spend a little bit of money, and see if it's ever going to take off. And yeah, it didn't at this point, right? It's a year in from when it was live, and it's really not making that much money, but I've also think about all the different videos I put out. It's really cool that I'm having this opportunity to do that, as well as thinking about all the other benefits I've learned about sort of Google AdWords, how that worked. I have sort of a paper that we're developing in this area, a couple of papers that are developing in this area. So there's a lot of research papers. There's a lot of sort of benefits of doing this that I wouldn't have done, right? And it was just sort of curiosity allowed me to pursue that particular thing, right? And that was helpful. The other fourth thing that I'm going to suggest is just be really skeptical of others that have no vested interest or that have opposing incentives. So when you're dealing with contract manufacturers, for example, on Upwork, they're going to push you to get sort of the biggest possible thing because they're making money off of you. So you have to be really skeptical. It's like when you go to the dentist and they tell you that your teeth are imperfect. Well, you have to be kind of skeptical of those dentists, right? They have incentives to to do as much work as possible. Same as other mechanics, for example. So finding that trustworthy person, it's actually really difficult to find, that they are not sort of working incentivized to make you feel kind of uneasy, and they're going to push you in that direction. They're going to they're going to do one of these kind of things and say, are you sure? Just make you kind of feel uneasy. A lot of people are going to do that. The other thing is some people have no vested interest, and they're going to be helpful. They're going to try to be helpful and give you tips and stuff like that. But if they have no vested interest, their advice is kind of moot, right? It doesn't really help you in any sort of way. It's going to get you kind of scared and nervous, and it's probably going to get you upset to some degree. And you probably don't want to listen to them as much, right? Whatever it is, you just have to keep pursuing that particular thing and mitigating. And they might say, well, you have to spend a lot more money. You have to do this and do that. Well, yeah, but it's not, you're the one who's spending it, right? And you know that it is costly. So you have to be very skeptical of those people that are giving that advice because they have absolutely no invested interest. They have no vested interest in that particular thing. So they don't know that it costs a lot of money, right, to pursue something. And you can't just jump right into something. That's probably a really terrible idea. And the final thing, the fifth thing that a lot of people forget about is that there are insurances out there that you can create, right? Or you can create sort of scenarios where you create an insurance of some degree, right? So, maybe it's liability and loss insurance, the first one. That's simple. I would not, and unless you have something that's really sort of dangerous or something like that can really screw somebody or something up. I wouldn't get that when you're starting something until it actually becomes a little bit of a substantial size, right? So maybe $20,000, $25,000, $30,000 a year that you're making. If it's like $5,000, $10,000, that you're making an entire year, I wouldn't worry about getting any sort of insurance or anything like that unless you have to some degree, right? It's just going to cost you. It's going to be a headache, and it's going to cost you, get into that profitability. So once you're getting, that you start getting, I need to get some insurance. You should get some insurance for that kind of insurance. But you can think about other ways of thinking about insurance, right? So start, so for example, I'm doing these YouTube videos. If I don't make any money off the platform, which it doesn't, the software platform, then these YouTube videos maybe will actually pan out somehow. There are other ways that you can sort of create insurances, right? So you create something else that maybe you make money in a different way that can help you in the event of a loss, right? It's going to minimize those losses that are a little bit more guaranteed. You think about ways to minimize those losses that are a little bit more guaranteed. So that's it. If you like this video, make sure and if you think of things I'm forgetting with, ways to mitigate losses and stuff with entrepreneurship, make sure you do add some comments, as well as give me a thumbs up with this video and watch some of the other videos. I really do put out stuff that I try to be as helpful and as positive, and, I just want to be as helpful as I possibly can at this moment to other people that are thinking about any sort of venture like this, to writers, for example. That's why I created this thing, to academics, to anybody that is interested in going into grad school, all sorts of stuff, that I'm trying to just be as helpful and open as possible. At this moment, I appreciate this time, and I appreciate everything that you do to follow along and to watch these videos. It's amazing to be able to do this in this day and age with YouTube. Truly is amazing. So thank you so much. Have a good day and take care. Bye.